Welcome back. After nearly 128 years, McGraw-Hill Financial is shedding its family name. The New York firm, which owns Standard & Poor's rating services, will now be called S&P Global. The move underscores the firm's commitment to shift away from the traditional publishing roots and instead rebrand itself as a leader in data and analytics for the financial and commodities markets. Joining me right now is S&P Global CEO Doug Peterson. Doug, good to see you.
Good morning.
This is a big day for you, a big day for the company. Is there a culture change going on here?
There is, and it's a culmination of changes over the last 3 to 5 years where we thought about a strategy that would meet the needs of risk managers, of portfolio managers, of corporate executives, so that we can meet the needs of all of that avalanche of data that they have.
And there is an avalanche of data. I feel like, we're all swimming in information. And it's not necessarily, which information you need, but what do you do with that information? So how do you survive and grow this brand when you've got all this information everywhere on the internet already?
So what we think of is our data becomes essential to people to make decisions with conviction, so that every morning when they arrive at their office or they're making a trade or they're looking at a portfolio, they take what we provide and they put that data into their models, or they think about it to make decisions.
Yeah, because yesterday we reported that ExxonMobil had lost its AAA rating, and then we were reporting on, what S&P has been saying about certain countries, emerging markets that are still very troubled. Tell us about the specifics and the expertise you have in these areas. Like, for example, you've got a group looking at the oil sector. Is that why they deemed ExxonMobil to not be worthy of the AAA rating anymore?
Well, across the entire company, we have different levels of expertise. We have a credit expertise in the rating agency. We have a group that's called Market Intelligence that has over 130 billion data points that they link together for market information. Platts, which is our oil and energy pricing and analytics business. But we're also able to take that information and cross-fertilize it in the company. Today in the oil business, as you know, the energy markets and oil markets are going through a lot of turmoil. And what you see for ExxonMobil, obviously, is they have decisions to make about how much debt do they want to have, how do they want to use their cash. And with the prices of oil, obviously, they've been taking a hit. But this is something that is deep analysis in every single one of our business verticals.
So characterize earnings for us right now, where you're seeing the strength, and where does the growth at S&P Global come from in the next, let's call it, 3 years?
We're seeing strength across all of our businesses. We just reported our first quarter results. We had a 5% top-line growth. Our ratings agency was weak because of weak issuance in the first quarter, but all of our other businesses had very strong earnings growth, partially because of acquisitions and partially because of organic. Our growth going forward is going to be much more international, as well as new products and new services that we're providing. But today we have embedded products in how people make decisions that today make us very strong to begin with.
How does the M&A landscape change things? This morning we're learning that Abbott is acquiring St. Jude. We've got more deals happening in the healthcare space, more deals happening and expected throughout corporate America. How does this consolidation affect the company?
Well, there's a couple things that we look at. One is, as you know, there's a lot of cash offshore. And if you think about one of the reasons why firms are merging, they want to have scale. In many of the ways we think of our business with scale, but it also gives them ways to use their cash. There's a lot of cash floating around. We want to understand how that trapped cash can become untrapped. It also gives us an opportunity for us to provide the analytics to the customers themselves, to banks, to investment banks. They want to know what's inside of our databases so they can analyze those mergers and acquisitions. And then afterwards, obviously, those firms need ratings, they need commodities information, they need data, et cetera. So we find that the movements of markets, the movement of capital markets are things that benefit us because people need more data and more analytics.
And you mentioned, there's also a market impact here, right? You mentioned earlier about the slowdown in issuance that we've seen. That affected the ratings business. What are you seeing today in markets that have seen the biggest impact on S&P Global? Because we know what's gone on in manufacturing. We know what's gone on in commodities. This huge sell-off that's been now, 7 years going, emerging markets as well. What's the impact?
So for our business, one of the first impacts is that we have some businesses that benefit from volatility because of the need for analytics. When there's a lot of volatility, people need more information. Our indices, we have some that trade on the exchanges in Chicago, and the more they trade, the more that we see information in the market. Similarly, in the oil markets, the more volatility is, the more people need data and analytics. The issuance markets have been very weak this year, partially because there's uncertainty with China, with the oil price, with interest rates in the United States, with zero interest rates around the world. There's a lot of conditions which have put uncertainty in the markets. But we have a window into all of that, and we can also provide thought leadership and other research, basic fundamental economic research and forecasts as well.
All right, we will leave it there. Doug will be watching. Congratulations.
Thank you so much.
Doug Peterson, S&P Global.